In our case, where the industry really got impacted severely, we got bruised and battered in the last 2 years, and the whole exhibition sector we felt was taking a bit of a backseat, and we felt that if both of us come together, I think the impetus which was getting lost and the momentum which was getting lost would come back. And India still, as you were saying beforehand, the number one form of out-of-home entertainment is still watching movies. India is a prolific maker of films. 1,500 films we make every year, and 1.45 billion people go and watch movies every year. And I thought that needed that momentum, and we needed to keep ensuring that out-of-home experience, which Indians love, all of us love, should not get impacted. So I think the coming together really is to be able to ultimately benefit the consumer, benefit the industry, and all stakeholders.
So Ajay, what about the synergies numbers, if you can put across a number? Because I'm sure the real estate players, the mall owners will be worried a lot with two of you combining together as a force. So the negotiation power from your company is going to really rise. And that could really come in the operational efficiency as well as synergistic benefit. Any number, Ajay, Siddharth?
There is no number, but I must tell you that contrary to what people think, that we have we are joined at the hip with the real estate industry. We are joined at the hip with the film fraternity, and we've come through a battering just now. Just now we're just coming together to become strong, make our balance sheet stronger, and all stakeholders have to benefit. We're looking at the forest and not the trees. We want to make sure the film fraternity does well. The mall developers, of course, need cinemas. We need them. And I think there is nothing in our plans just now to be at all to sort of look at disrupting the apple cart or anything like that.
Now, when it comes to us personally at the Inox Group, we've always run professionally. Our CEO, Mr. Alok Tandon, and a fabulous team of over 9,000 people have run Inox Leisure for the past 20 years into a really successful chain. We are super excited to partner with Ajay and PVR, and for this combined entity to be run under his dynamic leadership. He's been a pioneer of this industry, and we're going to be working collaboratively. We hope to share best practices of both companies with each other. And I do want to touch upon the landlord point that you just did. Currently as a combined entity, we have 1,500 screens, but India has about 9,500 screens. China has about 70,000 screens. Our aim, in fact, with respect to the landlords, and I hope they'll be very happy with this, is to, in fact, double a number of screens in the next 5 to 7 years. So I hope this deal kind of encourages real estate players to continue investments in this space and building new malls, which really stopped over the past 2 years. So as Ajay mentioned, it is really a symbiotic relationship.
Well, anything that we've done with listed companies with very high standards of corporate governance, we got advised by councils that CCI in this case, permission is not needed. However, obviously this merger will need stock exchange approvals, SEBI approvals, NCLT, shareholders approval. All those approvals will take about 6 to 9 months. But CCI as a body has the power to send any notification. But the councils at least told us before we entered into this deal that this doesn't come under the threshold limit of merging the two entities.
On what parameters, Ajay? On what parameters it doesn't meet the threshold limit for CCI clearance? Can you extrapolate on that, please?
I think because both of us were shut for 2 years, and I think the turnovers were impacted, and that exempts us from basically the CCI purview.